Okay, hey, you're listening to the Foreclosure Answer Man with Larry Bass. Here's my information real quick. As you can see, Larry Bass, the Foreclosure Answer Man. I'm going to stop my iPod. But we're going to talk today about loan modification. Now, folks, you're freaking nuts if you don't understand how this thing works. And even those of us in the real estate business, we're just learning it just now. I was talking to Bank Wells Fargo today and going over how that worked. And here is the craziness. It's typical government way of thinking. For example, we were talking about a particular person I know, and they go through, what your income is, what your outgoing is. I don't understand. They asked for dry cleaning, but they didn't ask for what your clothing is. Dry cleaning, what, $10 a month, clothing, $100 a month. But hey, these are accountings and the banks. But with loan modification, what you got to understand, a lot of you out there basically have no money, and you think they're going to go ahead and give you a loan modification so you can keep your house. Well, unfortunately, that does not work that way. You actually need to be within a couple $100, either shy or over what your income and debts are for this thing to even work. So for those of you who have lost a job, been on that good old Obama's 99-month unemployment, and thinking that this is going to go ahead and save your house, it's not. What you got to understand is this. You got to have income. Did I say income? Yeah, I know. We're dealing with banks. They don't have to have income. They just get the government to bail them out, and then we pay through tax dollars. But for you and I, we actually have to have income. Now, here's how loan modification works. We take your income. Now, let's just say, for example, your current house payment is $1,200 a month. So you got your payment of $1,200 per month. All right. And when you qualified for this, you probably were making, to be honest with you, probably no less than $2,500 a month, closer to maybe $4,000, $3,500, somewhere in that range. So that's probably what you were making when you got the loan in the first place. Then what happened is you got your job. So we're going to go here, no job. But hey, don't forget the unemployment figures have been going up and up for some sectors. So now instead of course $4,000, you're having to work at, say, UPS or FedEx for $12.23 an hour. All right, so we're going to get our crusty dusty HP 12C calculator. This is a calculator, HP 12C. And we put in, we'll use 1223. And trust me, you're not going to work full time, not in like places like FedEx, UPS. But let's just say you're working at McDonald's, and they won't pay you that much. But let's say they do, and you found a full time job, which is 2,080 hours a year divided by 12. That is an income of $2,119. So you went from roughly 4,000 to half. Now, some of you think, well, great. If my payment's $1,200, now I'm making half that. They're going to do a loan modification, and I only have to make a $600 payment. Doesn't work that way, folks. Doesn't work that way. What they'll do is they may extend your period. Say you owe 20 years on the loan. Well, it's a 30-year loan, so you're still paying as a 30-year payment. Or your interest rate's at 6, 7, somewhere in that range, maybe even 5. They may drop it down to 2-3% for maybe 1 year, 2. I've seen them even as long as 5 years fixed, and then goes up to say 2%, 3, 4, 5, and stays at 5, which is a pretty good deal. But you're not gonna save half. So I wish you were, but you're not. So what they're gonna do is I was going over with this guy at Wells Fargo, nice guy, and the income, the illustration we were using was, that's got it right here. Okay, the income was roughly $54.18 a month, and the outgo was $59.72. Now he said, "But this is income, so I don't know how to do that. I'll just do income. COME income, and this is the outgo." Now he was saying, you would think, okay, good. Well, the income of what we're doing here is less than what the outgo is, so maybe they'll go ahead and like drop the payment. $400 or $500, so they'll be about the same. It's not how they think. For one thing, on income, normally they're going to just count the person and the loan. So let's just say, for example, I have a house and it's my wife and I, but I'm the only one on the loan. Well, they're going to only count my income. But since I am married and she has income, they're only going to count 75% of what she makes. So even though, let's say she makes $1,200 a month, well, they're only going to count 900 of it, which is, you can see then how this income part, okay, INCOME, and we'll just put debt. You can see how this number gets lower because they took 75%, say, of a spouse's income. And then on the debt, if you have, say you have a house you're in, but maybe you have rentals, well, they'll only take 75% of that. So if you have a rental, in today's market, I have 3 rentals, sometimes we don't get paid. And for some reason, people out there who are renting our houses think that we're rich landlords, and it's okay if we don't get paid because, hey, they're only making $12.23 an hour. Well, then they need to rent something cheaper. But let's not go with that. So what was ironic to me when I was talking to this Wells Fargo guy is I would thought if your income is lower than your debt, they would maybe work with you. He said, no, it's got to be within maybe a couple $100s. So when you talk to these people, figure out what your income is and what your debt is, and then keep it within about $100 to $200 either way. So even if your income was maybe, in this illustration, let's just say it's $3,000, and your outgo is $3,200, that'll probably at least get you looked at to do a loan qualification. Or if the income is, in this case, was $3,400, you're within a couple $100. So that's kind of where you're going to want to be on these loan modifications. Now, just looking here, they're going to ask you stuff, of course, what your rent or your house payment is, what your car insurance is, food, dry cleaning, just some basic stuff like that. So you want to have that prepared so when you talk to these guys, you have a good idea. And if the other guys who you're talking to, other man, woman, wants to be on your side, oh, that is an alarm. Hold on. Got to pick up my son from school. We got to, they'll kind of say, well, you know, we may need to go ahead and adjust figures. For example, food. They said that the national average food is $150 per person a month. So if you, and in my family we have 3, so that's $450. And if we use 600, for example, and my income side here is too high. Anyway, you may have to adjust this. So it's kind of it's not a real great system, but it's the one that we have to deal with. So anyway, that's just a real quick deal on loan modifications. Let's see if I can get my, there we go. Let me turn this down a little bit. But if you have any questions, you can go ahead and get a hold of me now, whether you're in the Denver area where I'm at or across the country. I know agents who are trained in foreclosures all around the country, so I can put you in help with them. But I'm Larry with the Foreclosure Answer Man. And you can see there's my phone number, the 303-944-2277. And Larry at eRealEstateTeam.com. But I'm foreclosureanswerman.com. And you have yourself a great day. Bye.